Hi, I am Puvanendran, Assistant Professor in Department of Commerce with Computer Application, KSR College of Arts and Science for Women, Tiruchendur. Now we discuss about the indirect taxation. Introduction to indirect tax. Concept and the futures of indirect tax. Definition. Indirect tax are levies imposed on goods and services rather than on income or profits. The burden of this tax can be shifted from the producer to the consumer. Futures levied on goods and services collected by intermediaries. Example, retailers. Example include for VAT, excess duty and customs duty. Difference between direct and indirect taxes. Direct tax paid directly by the individual to the government. Indirect tax paid indirectly through goods and services. Example for a direct tax, income tax and wealth tax. Indirect tax like GST, excess duty and VAT. Indirect tax burden cannot be shifted to consumer. Indirect tax can be shifted to consumer. Direct tax can be progressive for a higher income, higher tax. Indirect tax generally regressive. Same rate for all. Special features of indirect tax levies widely applicable across various sectors, easier to collect and enforce, less evasion compared to direct tax, can be adjusted to control consumption. Example, higher taxes on tobacco, contribution to government revenues. Indirect tax form a significant portion of government revenue. They are crucial for funding public service and infrastructures. Role of indirect taxation regulates consumption patterns, promotes economic stability, encourages or discourages certain behaviors, example through the subsidies or taxes. Merits and demerits of indirect taxation. Merits like a broad base of collection, difficult to evade, encourages savings and investment. Demerits like a regressive in nature, can lead to inflation, may burden lower income groups. Reforms in indirect taxation. Introduction of GST to replace multiple indirect taxes. Simplification of tax structures. Digitalization of tax filing and compliance. Foreign Trading Policy FTP 2023. Foreign Trading Policy 2023 aims to boost exports, simplify procedures, and enhance India's trade competitiveness. Focus areas include MSME support, e-commerce exports, and town of export excellence. Key reforms involve paperless filling, rationalizations of export schemes, and the introduction of an amnesty scheme for exports obligations defaults. An overview of goods and service tax GST. Introduction of GST in India. Kelkar Committee recommended the implementation of a single indirect tax to replace multiple tax. Constitutional Amendment, the 101st Constitutional Amendment Act 2016 paved the way of GST. Implementation date. GST was implemented on 1st July 2017. Significance: eliminate the cascading effects of taxes, promotes a unified national market, enhance transparency and compliance. Features like dual structure, CGST, central and SGST, state for intra-state transactions, IGST, integrated for interstate transactions, input tax credit, ITC mechanism, online registration and filling. Benefits of indirect taxation: reduction in tax burden, simplification of tax administration, boost to Make in India initiatives. Important GST common portal like GST portal www.gst.government.in. GSTN portal provides IT infrastructures and service to the GST system. Taxes and duties not suspended in GST. Alcoholic liquor for human consumption. Petroleum products to be included later. Stamp duty and registration fees. Taxes on the sale of land and real estate. Rates of GST in India: standard rate and special rate. Normally standard rate 5%, 12%, 18% and 28%. Special rates like zero rated. Example exports of goods and services. Exempted goods and services also. Role of GSTN in implementations. GSTN, Goods and Service Tax Network, is the IT backbone of GST system. Provides service like registration, return filing, and tax payment. Ensure data security and system reliability.